Kevin Hincks, what do you make of this? Were the numbers too high relative to even what we were hoping would be the worst case of 25%? Is that where we start?
Well, Oliver, the market is certainly consuming and digesting the numbers. And frankly, the rhetoric is deafening right now from news media and everyone covering these numbers and analysts and people in the financial markets. It's loud, Oliver. It's really loud. And so when I look at a market like this, I look at the macro indicators that you were just talking about, where the dollar is, where yields are around 4%, where crude oil is. That is all, looking, this is a day where you have to make calm decisions based on 3, 6, and 9 months in the future. And the rhetoric, the big moves in markets, obviously, Oliver, this is not my first rodeo, so you have to look at good companies that are getting sold off. We say it a lot on this network. No stock, no good company can dodge a global sell-off. And that's what you're seeing today right now. Why? Uncertainty. Remember this, we're only back to at or around the March 13th lows in the E-minis, about 55.09.
Right, that's what I was just saying on the chart too.
Number.
If we get to the highs of the overnight session, if we could get some kind of bid in the market to hold that March low, then that's kind of the hope today. But I mean, it's just a monster move in the dollar, Kev. I mean, this is pretty intense stuff. This is
the macro
very high conviction trade.
Setting up for, but the macro, in my opinion, Oliver, seeing yields around 4%, seeing the dollar around 101, seeing crude oil, I've got it right now. I want to give you a live number, down 7%, 66.64. Those all make a good case for the macro going forward. Now, today's going to be bumpy, Oliver, and you have to look at these names at each one individually. How are they affected? But here's the other thing. You have to start really watching the headlines, because the headlines are going to drive. Howard Lutnick's already come out this morning and made headlines saying China tariffs will drop off if they make concessions on fentanyl. There it is. There's one. There's going to be more, Oliver, and that's what's going to affect. You can't ignore the fact that we've opened down the last 3 days and rallied. Does that mean we're going to today? It's a little harder, ball to push up the hill today to get that done. But I think markets will be volatile. I think VIX. I thought, frankly, Oliver, VIX should be higher. I saw the VIX 26.5 this morning. Now it's 27. I frankly thought it'd be higher.
We were at 30 in March.
Yeah.
So. I'm not sure what's going on there. Is there a lag, Kev? What's up with that?
Well, I mean, it's not open yet, in all honesty, right? There's no, remember, the VIX measures the implied volatility of the SPX, which isn't open yet.
Right.
So
we got
you have
futures,
to watch
though.
for once it opens. I think you'll get a more clear picture. And I think when you see 30, remember, Warren Buffett has great things, and it says, be greedy when people are scared, Oliver. And this is the day you want to look 3, 6, 9 months out and make good decisions based on your overall portfolio. So,
right,
Oliver, this is not my first rodeo.
I hear you.
A bunch of these, and
I know.
The key is to be calm and make good decisions on a day like this.
Yeah.
Understand what implied volatility means to your option positions, and higher levels of implied volatility means higher premiums, means higher levels of daily decay.
Yep.
So there's things you can do. But the most important thing, and I talked on a podcast last night with Scott Barrow, who's on our program a lot, keep trading. Stay involved in the market. Don't freeze. These are days to. There's going to be a lot going on here. It's going to be a fun day. I live for these markets.
I hear you.
This is going to be fun.
I love that energy, Kev. That's what I love about you. You're always trading. You are a machine, seriously. And I think that of all of us in the office that have been trading, you're in the last year, you've been killing it. I know that because of the stuff that you guys have been putting on. However, I do remember a bright morning 1 February recently, call it what, 5 years ago now, where you gave me a little bit of a young grasshopper speech like the day of COVID highs. And that was obviously beginning of a monster move. The question when you say think 3 months, 6 months in the future, does that not depend right now on a high conviction that we're not going into recession? Because this bond move and the stuff I'm hearing from economists that I trust, like Neil Dudd at Renmac, I mean, they're saying it's like guaranteed because this tariff stuff. I don't necessarily feel that way right now, but is your conviction in the trade today dependent on that? And how does jobs data fit into that? Because continuing claims didn't look great.
Continuing claims, I mean, remember, jobless claims today were 219,000. Still a strong labor market, but you are going to go through some level of transformation as the government works through. Remember, Oliver, in the non-farm payroll data we got for the year of 2024, the calendar year, the U.S. government averaged 43,000 jobs a month. So some of that coming off and backing off shouldn't scare anybody when you understand all the things that are happening. But I think there's a bigger picture here today. Today is really a day where you look at your portfolio, see where you can get it in the best possible spot going forward, Oliver. And I don't know where the market's going to end up today, but I'm certainly going to be involved in it as some of these stocks are getting awfully cheap here. Remember, it's not like we were sitting at highs.
Yeah.
We were already.
I'm with you, Kev. I am
7 to 10% off our highs.
I generally sympathize with that view right now because. RH Restoration Hardware is just getting annihilated right now. So there's a lot of stock-specific stuff. And to your point with volatility, maybe you also watch, maybe you make a move at the open, but then you also watch to see where vol goes and save some ammo for a potential spike in VIX. Because to our point before, VIX looks pretty calm right now. So that's the last point I would say. Do you think that's fair to maybe keep a couple in the chamber today for a vol spike?
Exactly. These are days when the dry powder you had, you put some of that to work, right? If you were waiting at high valuations for the market to come down, like Warren Buffett apparently has. Remember, think about how much cash he has today. It'll be interesting to see what, if anything, someone like Warren Buffett does. But this is a day to very calmly put some of your cash back into the market. I don't know. At different levels, right? Could the market go lower for here? Sure. I think 5,500 is a pretty important level for the market to at least hold or stay near. But watch headlines, Oliver. This is today, this week, next week is going to be a headline-driven market. Remember, we had economic data out this morning. No one cares about the economic data today. We care about the headlines that are coming out. And that chart of tariffs, how many of those are going to be negotiated away, Oliver?
That still seems possible, too. I think the market's kind of getting tired of waiting for that, though. And on that subject, I kind of am as well. It's like, all right, the math already is very questionable, the way they're defining tariffs. It's not really the way tariffs work. But it's fine. I get the notion. And I loved the big board, but the market is pretty sick of having to wait for negotiations, I guess. Thanks, Kev. Good stuff on the analysis and I think really good message on the trading approach today.